Good afternoon, good evening, or good morning, depending upon where in the world you're watching this from. That is my standard Afternoons with Aces YouTube greeting. Thanks for watching this video. With me, I have Lee Briggs and Ryan Teuscher. So we were together in Orlando a few weeks back doing an Ask the Expert session. We also had Jeff Hare with us in that session, and there was a lot of questions from the audience about what to do in Fusion and how to get the best implementation and all those things. And one of the topics that came up, which all three of us thought was interesting, was the dichotomy of HR and ERP or financials, and trying to get them to agree, and not it's about design decisions, but more or less about everything. And so we got a lot of questions around, org structures, and a lot of questions around just general design and whether HCM people should be in finance design sessions and vice versa, whether finance people should be in HR sessions. And the three experts, self-appointed by the way, we all came to the logical conclusion that, and I've always had this belief, that HCM people should be in finance design sessions. I've had that belief all the way going back to release 11, when the org structures changed pretty substantially from 10.7 in EBS, and certainly in 11i. There's a marriage between the two, and if you get it wrong, it causes a lot of problems. And that's really going to be the focus of our next series of discussions that we're going to be presenting here on this forum. So real briefly, Lee and Ryan, you guys kind of heard those things. I'd like your perspective on what we heard at the conference and what we think warrants discussion over the next few weeks. Lee, you want to go?
Okay. Yeah. So let's go through the first one. In the session we went through the major structural items we have in finance and HR. So finance, we looked at, or ERP, I guess we'd say, we looked at the concept of the legal entity as we use it. So in the finance side, legal entity really owns transactions. It can enter into a contract. So it's purchase orders, it's invoices. It's also around 1099 reporting. We have that construct. And HR has to rely on legal entities, but we have that structure. The other part was looking at within the chart of accounts. So within the chart, we have three required segments, right? I have to have a balancing segment. That's going to make sure our balances, our balance sheet balances, our trial balance balances, that's all well and good. We have to have a natural account, so revenue, cash, expense, whatever. But the third segment is cost center. It is used in finance. It's primarily used from a reporting construct, I guess, in fixed assets. Fixed assets, we're looking to identify the cost center segment, and all the financial the reports we get out of fixed assets are typically cost center based. But it also does some great stuff around our approvals. So identifying what a cost center is. Can start saying, okay, route to that cost center manager, and it really uses that term manager to go through there as functionality that's out there. That cost center manager, that department manager, is actually an HR construct. So I'll kind of pass it over to Ryan now. Ryan, how does that department cost center abstract flow through to your HR side?
Absolutely. Thanks, Lee. It's a very interesting concept where this is where that marriage really occurs, right? Your department tree and your department hierarchy is going to be the key piece here. The managers of the departments, that can be configured at the department level. It can be configured via an area of responsibility in AOR. But all of these things are going to have to do with your HCM structure and who reports to who and what rolls up to what. Tom, you used the word marriage, and I think that's a great analogy for this, right? These aren't two different things that are working together. Is sometimes, right? When these two entities are married, they're intertwined and they are acting as one singular unit. If you are setting up your HCM and your ERP trees correctly and you are working in tandem, then this is going to be a successful marriage. If not, then there's going to be some rocky roads ahead, Tom.
So I'm going to drill in on that for a second because it's an interesting one to me, and that's the hierarchies. So just to be clear, everybody, we're not saying that they have to tie. They don't. They're independent constructs. Right? So the roll-up hierarchy of cost centers or departments, whatever terminology you want to use in finance, is independent of HCM. They do not have to tie. Right, Ryan?
Correct.
But what we're saying is, in the conversation we had in Florida, is when they don't, you get confusion. And here's the question that we got. I'm going to frame it differently, but What's the major impact when they don't tie? And this is what we saw. Depending on who's looking at a report, they might be expecting a roll-up of organizations or cost centers or departments that reflects the HR construct, right? So finance and procurement and sales is in one grouping in HR. But finance and procurement are in a separate group in ERP, and then sales is in a different one because it drives revenue, right? And so when you look at a report, whether it's an HCM report or a finance report, and they don't tie from a logic perspective, you get confusion. And what happens in that situation is, aside from confusion, the biggest negative impact that I see, people don't trust the data. They don't trust the reports. And then what do you invariably get? You get your shadow databases, your shadow Excel spreadsheets that are not in the system that causes people problems. And that's really what we're trying to avoid. And that kind of gets to a lead into our next point, which is, your hierarchy maintenance, right? And so what I try to talk about, I think at a logical level, and I try to push people to this, is when you do reorgs, and reorgs happen all the time, and we just had a conversation yesterday with one of my clients. They were really concerned about doing reorgs because of the way their profit centers were grouped. If you set your, I'll take a step back. I always have a colloquialism that I use with reports and hierarchies on the ERP side. And that is, if you do a good job with your chart of accounts and your hierarchies, you'll always be maintaining one or the other, meaning you'll always be maintaining your hierarchies, you'll be maintaining your reports. If you do a bad job, you're maintaining both. So what I mean by that is when I set my profit center hierarchies up or my cost center hierarchies up in logical groupings, I have them grouped by line of business, and I always have a current hierarchy. And that current hierarchy is exactly what it sounds like. All my reports, all my allocations are always built off of that. So when I maintain that hierarchy, all my allocations and reports are automatically updated, right? And so when I do a reorg, you can always copy the old one and name it old, and then you do your updates in the current, and your finance hierarchy is the same. Ryan, what I'd like to talk to you about is with that kind of concept, what does that look like from an HCM perspective? When you do a reorg, what's it look like, and how do you go about effectuating it? And then talk about maybe the downstream effects of tying it to the finance. Make sense?
Yeah, absolutely. I would say that the reorg in HCM is going to tie very closely with your organization tree or your department tree, depending on which you're using. The distinction between those, for those that aren't familiar with HCM, a organization tree could use things outside of just departments. It might use your business units, your legal employers, your divisions, if you have anything set up like that, while departments are strictly going to be departments. They act very similarly. We'll use them interchangeably in this discussion. But a reorg within HCM is going to be changing that tree in some way or another. An example from a client that I can think of recently, this is a public sector entity, and so they had several offices that rolled up to the city manager. However, they didn't really want them to roll up to the city manager. They wanted them to operate independently of the city manager's office, and then everyone rolled up to sort of like a global, all divisions, all departments entity. So in order to do that, we needed to effectuate a reorg. So what considerations are needed there? Your positions, where are they rolling up? Your management hierarchy, where is that rolling up? If you have a position hierarchy, do we need to adjust that as well? These are some of the considerations that you might need to take in regards to ERP. I would say take a look at your cost centers. Take a look at your position costing and ensure that all this is still accurate and that you're pulling from the right bucket when you're costing this information. Lee, I see you're nodding your head. I think you have something to add.
No, sorry. I was agreeing. I was agreeing with you. It's HR stuff. It's people and jobs. You're fine. Carry on.
Yeah. Well,
way to alienate half our office, Lee. I appreciate that. That's
right. You're fine.
People and jobs, but it can get messier if you aren't being careful. But Lee, I'm curious, right? So let's say I am an HCM person and I come to you and say, hey, we want to effectuate this reorg. We'll take the use case that we just talked about, right? We are going to move this department from being a sub-department and everything that it rolls up to having its own pillar that's going to roll up to all divisions. What actions are needed on the ERP side to ensure that we're able to effectuate that change?
Okay, that's a great question. So within the finance side, we still have account hierarchies out there, and it's called account hierarchies, but it's every segment in your chart of accounts. So assuming we're talking about something like a department, a cost center, that construct, The values we have in the chart are either detail or summary, right? So I can either post to them or I can't post. I can post them in the detail case, or I can't post to them. It would be part of a roll-up. And I think that's where we're looking at there. So moving individual values around, moving parents around between grandparents, that functionality is standard functionality. To Tom's point, you typically have a current version of every hierarchy, and that's the one that you build every report off. My income statement, my statement of operations, my balance sheet's a bad example for this, but those reports are all built off the current hierarchy and using those roll-ups. So I would, if it were me and it was a major hierarchy, if it's not just I'm creating a value and putting it in there, but if it's a major reorg, then I would say take my current one, save it as of June 2026, and have a version which is June 2026. That is, I'm taking essentially a snapshot of what it was before I made the change, and then update my current to say, yes, this detail value now rolls to this parent, this parent and children now roll to another grandparent, something like that. Maybe I have this new overall global structure as you are naming it out. Great, I have a new summary version, and I just move all these children underneath there. As long as everything rolls up eventually to all departments, all cost centers, all accounts, whatever all is, every report is still going to work, but you're going to have that drilled in out there. Tom, that's the same way for allocations. It's the same functionality for allocations, right?
It actually is, and I appreciate you doing that, because in addition to talking about allocations, oddly enough, in this day and age, and we're talking about something with AI, and a cool thing that I did in a demo environment, but it speaks to the importance of at least keeping your HCM organizations and your finance organizations reconciled and in the same hierarchy, or at least in the same groupings. So what I was able to do is I was able to create an AI agent in the demo environment to go out and look and get me a head count of all the people in the department, and that was the organization construct in the demo instance. Get me a head count of all those personnel by this department. And then I was able to map that department, because it was logical, to the same organizations or cost centers in the ERP space. It got me a count, and then it booked a statistical journal entry for me by department, by legal entity, right? And if you're not used to allocations, that might not be meaningful, but if you are, it's pretty exciting, right? So a lot of people do allocations by headcount. And the way you do headcount, there's two different ways you look at we do allocations. Some people will book a headcount monthly, so that you're looking at period to date and it's always the same number. I actually prefer not to do that. I prefer to set my statistical accounts up as, let's say, balance sheet accounts, so that I'll book my opening number whenever I go live, and then each month I'll book the delta, so that if I had 100 people in January and I have 98 people in February, I would book a statistical journal entry to lower it by 2, so year to date it's 98. And the reason I do that is because if I want to go back easily and look at the period to date balance, I can certainly do that. Whereas if you're always looking at period to date, it's certainly fine and it works. It just matters on how you generate your journal entry. Neither one is right or wrong. It's just a matter of preference. But the logic of what I'm trying to get to is a lot of people do allocations based upon headcount, and keeping those HR constructs was a pretty easy thing to do using the AI agent. So, we're kind of talking about allocations, and I'm going to talk about allocation distortion. And it goes back to the point we made in the last conversation, which is if you don't have agreement between ERP and HCM, and somebody runs a report and they're expecting to see 250 employees in this hierarchy, but in finance, and again assuming they're booking headcount, they see 500. Why is that? Is it because somebody double booked the entry? Maybe. Or it's because the roll-up doesn't make sense and there's not agreement between the two.